Hello everyone, Joe Vitale, American Retirement Advisors with the Great Investments Weekly Talking Points for the week ending August 4th, 2023. Let's get into stocks. Equities were lower across the major global indices after a major bond rating service cut the rating on the U.S. Treasuries. And we'll talk more about that in a minute. Sending yields up and valuations down. That's what happens. Every time the interest rates go up, what happens to your market? The value goes down. The U.S. benchmark U.S. index S&P 500 was down 2.26%, the Russell 2000 declined 1.19%, and the NASDAQ was down 2.84%. Now overseas, the developed markets was down 2.37%, while the emerging markets were down 2.36%. In the U.S., the best performing sectors were energy and consumer discretionary, while utilities and technology were the laggards, and by style, the small caps outperformed mid and large caps, and value outperformed growth. It goes back and forth, right? So fixed income, the Fitch Ratings Service lowered its rating on the U.S. Treasury issues from AAA to AA+, citing lower confidence for the country's balance sheet over the next 3 years, given a high and growing debt burden, given repeated debt limit standoffs and last-minute resolutions. Well, realistically, all the freaking spending going on and just printing money like crazy. It's just ridiculous. But the yield on the 10-year Treasury rose 24 basis points overnight to 4.2% before settling back to close the week at 4.05, up 9 basis points. Meanwhile, the 30-year Treasury rose 29 basis points before settling the week at 4.21%, up 18 basis points. Let's talk about commodities. Gasoline prices at the pump rose 28 cents per gallon last week from July average, driven by higher oil prices and reduced activity at refineries due to excessive heat. So right now at $3.76 per gallon, prices are down 7% from a year ago, but still up. Economic data. A layoff report shows announced job cut plans in July was down 41.8% from June and down 8.2% on a year-over-year basis. It appears that the pace of layoffs is fading and remains largely confined to narrow sectors. And a separate report indicates that unfilled positions are being eliminated. The number of job openings in June declined slightly from May to 9.58 million. So there's still a good amount of jobs out there, but there's not all this worry, as much. So we'll see how that plays out. Let's go to company news. Amazon, which is a Core Select and G33 holding, reported revenues and earnings that exceeded expectations. Revenue growth in its important AWS division was ahead of expectations, and management indicated that it had stabilized. So shares rose 5.57% for the week. And how about Global Payments, which is a contrarian choice and a Core Select and G33 holding? That reported revenues and earnings that also exceeded expectations, and management cited strong momentum and expense reductions. Shares for the week were up 12.64%. So that's positive news. And then let's talk about Pacira Biosciences. That is a G33 holding. Shares rose 10.34% last week after the company announced earnings that beat expectations and reiterated full year's guidance while lowering the revenue estimate. So the market liked that a lot as well. So that concludes this week's market summary. Thank you so much for being part of the ARA family. If you'd like to reach out, you know our number, 855-756-5700. Anybody who's kind of wondering what to do in this market and the turmoil, make sure you have them give us a call so we can help them out. Make sure you're subscribing to our newsletter. Share it if you'd like to. Go to our YouTube and Facebook pages. God bless you. We'll look forward to seeing you again next week.